Last week, there was the Wisconsin bankers had their annual conference, and they brought in a couple of economists from outside of the state. To be an expert, you have to be at least 50 miles away from the community you're working in. So they went outside the state, so that makes them an expert. And what they basically said is that the state's economy is kind of lagging behind the rest of the nation, except for Madison. Madison's doing very well, thank you very much. And I think that this is something that you're probably going to hear a lot about, how Madison is doing compared to the rest of the state. And when I say Madison, I kind of mean the Madison metro area. Over the coming elections, given kind of, Mayor Sogerlund running and some of the other things that are going on. Indeed, if you look at kind of the job recovery from the Great Recession, about 3/4 of all the jobs that the state has generated has been in the Madison area. Now, I think that that is relevant because it talks about what's happening to the rest of the state. If you take Madison out, the state's economy is not doing very well. And I think that's going to really kind of inform the conversation that we're going to have this afternoon about the urban-rural divide. Now, because I'm between you and lunch, I'm going to go through these fairly quickly, okay? Because there's a couple of things that are repeat points here. But if you talk to the governor's office about how the state's economy is doing, the first thing they're going to point to is the unemployment rate. And from the unemployment rate, we are doing fairly well. But notice how we're following the national trends. Generally, as the national economy goes, the Wisconsin economy follows along. It's whether or not we're just kind of bumping along better than the national economy, or are we kind of lagging behind the national economy. In terms of unemployment, we're actually doing pretty good. If you look at the average monthly unemployment rate from 1976, it's about 5.6%. Right now, we're at 3.2%. But this does not include the people that are what are called underemployed. These are folks that are working at jobs that are below the potential. And I'm going to come back to that again because I think that's something that's going to be very important to the future of the state's economy. Okay? Whoops. If you look at employment growth, you can see the Wisconsin economy is rebounded. But notice that it is not growing nearly, two things here. One, it's not growing nearly as fast as in the post-recovery period. Yes, we're growing. We're above where we were before the Great Recession hit, but if we had grown at the rate of the national economy, we would be doing much, much better. The other thing is look at the trend in the growth pattern of the 2000s. Compare that trend to the growth now in the post-recession. Our growth rate has essentially slowed down. So yes, we're growing, but we're growing at a slower rate. Okay? If you look at where a lot of that employment is coming from, one of the things that Tess is going to be talking about this afternoon is the role of business startups. And one way to look at this is where's the employment growth? Is it coming from wages and salaries? I'm working for somebody else. Or is it coming from proprietorship, self-employment? A lot of the growth in employment in Wisconsin is actually coming from self-employment, proprietorship. Notice again that the growth trend in the 2000s was much stronger than it has been more recently. If a lot of the job growth is coming from proprietorship, and we've had a significant slowdown in that growth rate, that again is pointing to why are we slow in terms of proprietorship growth? And that's something that Tess is going to be talking about a little bit more this afternoon. Again, if you look at proprietorship compared to the US and to the Great Lakes states, we're kind of mimicking the Great Lakes states, and that's partially because of Michigan. Thank God for Michigan, because it always makes us look good. The other thing is Illinois. Illinois is really messed up. And I think if you look at Illinois and you want to point to where government has an impact on economic performance, I think it's the dysfunctionality of state government in Illinois is what's actually dragging the Illinois economy down. Businesses don't want to invest in Illinois because the state government is so dysfunctional. But again, look at the growth rate in terms of proprietorship. It's lower than the national average. This is a question for us. Why are we so much lower than the national average? If you look at farm proprietorship, which is a simple measure of kind of the number of farms, if you will, you can see that there's a decline there. But notice at the national level and in Wisconsin since 2012 that has kind of plateaued, is stabilized. We're very curious as to why that is happening. And I think it happens, it's the growth of the local foods market, that specialty alternative agriculture. These may not be very, very big farms, but in terms of the number of farms, they're actually picking up. Now the question is that if you look at the local foods movement over the past 30 years, it is also plateaued a little bit, and we're starting to ask some questions about why is that happening. So this free fall in the number of farms, the number of farm proprietors, has kind of stabilized. Will it turn around and start to go back up? I don't know. Okay? If you look at farm employment, you see the same kind of a pattern, particularly at the national level and for the Great Lakes states. It is basically stabilized. It's not growing, but it's not declining any further. Okay? And again, we think part of that is this growth in alternative agriculture, more the specialty crops, not so much like cranberries and things like that, but in terms of kind of local food markets and things like that. Particularly if you look in the western part of the state, the driftless area, you see a lot of kind of these pocket farms that are not very conducive to large-scale commodity agriculture, but they're very good for kind of local foods type production. And we have a couple of markets, the Twin Cities and the Chicago market area, that has tremendous growth potential for some of these areas. Okay? Now, food processing. How many of you have heard that agriculture is an $88 billion industry? Okay? 2/3 of that is in food processing, manufacturing. Okay? And a big chunk of that is cheese production. One of the things that has impressed me, when I first came to Wisconsin, 25 years ago, the thing that kind of struck me was that within the dairy industry, a lot of the dairy farmers and a lot of the dairy processors were kind of at each other's throats over prices. That's changed. The two sides of the industry basically come to realize that they're in the same boat and they should be rowing together. So the industry, so rather than the processors and the farmers kind of being, blaming each other for poor prices, they're actually working together, and I think that's a positive thing. But as Paul noted, that there's been a decline in the number of jobs in food processing. Well, there was a decline from 1998 to about the end of the Great Recession. There was a bit of a decline there. But notice the return. But notice that between 1998 and 2016, there's only been about a 7% increase in the number of jobs that are in food processing. A lot of the growth here is really due to automation, okay, and the changing nature of how manufacturing is working here. So we do see some growth trends here, but it's not very strong. Okay? But if you look at gross domestic product, which is another way of looking at the economy, Wisconsin is doing much better. You actually can kind of see that growth trend since the end of the Great Recession is actually kind of mimicking the national economy. So if you look at the Wisconsin economy in terms of gross domestic product, we're kind of doing okay. But it's not generating the jobs that we would expect. Okay? It's not generating the amount of entrepreneurship that we would expect. So this is one of the things when you ask an economist, how's the economy doing, you go, well, it depends. It depends on what measure you're using. Okay? Well, it depends. Okay? If you look at farmer gross domestic product, you can see that there's actually fairly strong growth here. Okay? You can see the ups and downs and whatnot, but generally agriculture in terms of gross domestic product in Wisconsin is actually doing fairly well. It's going upward. Okay? The problem is that we're not seeing that growth associated with job growth. You would think that we coordinated our presentations. We did not. But I think when you get all of your presenters talking about foreign exports and the importance of foreign exports to the Wisconsin agriculture, I think there's something there. If you look at gross domestic product growth and then you compare it to this foreign export growth, you can see that a lot of the growth of Wisconsin agriculture is actually coming from foreign exports. Okay? If we are to grow Wisconsin agriculture, we have to really take a serious look at those foreign exports. Okay? The particular areas that are growing are dairy, soybeans, but you can see that there's tremendous increase in the amount here. But this is starting to, I think there's a theme here and we can kind of move on from this. Okay? Now, this is food processing. Again, we're seeing growth in gross domestic product, but we're not seeing growth in employment. Not at the same rates. Again, within manufacturing, what we're seeing is that gross domestic product is doing very well. Manufacturing in the U.S. is doing very well. The problem is it's not generating jobs because of automation. There's a study that came out of Oxford, I think it is, I think Tessa's going to talk about it a little bit, is that if you look at the manufacturing, the occupations in manufacturing in Wisconsin, over 50% of the occupations, the jobs in manufacturing have more than an 80% probability of being automated. Okay? We're moving in terms of how we do manufacturing in the state, and I think that's filling out in terms of food processing. Now, what about income? This is per capita income. You can see that Wisconsin's per capita income is growing fairly well. Notice that we're just a little bit below the national average. We've always been below the national average. The only time that Wisconsin's per capita income has been above the national average was in 1976. Other than that, we've always been below the national average. Okay? The thing that has got economists really worried, and I think this is going to talk into the urban-rural divide and the politics of resentment, is what's happening to income distribution. This is a simple measure of income distribution, and the higher the number, the more unequal the distribution. Okay? And there's really kind of been a lot of studies that are going on here. I don't want to go to that one yet. There's really kind of a lot of discussion in terms of what's the implications of this. I think the implications on the economic side are less easily understood. The implications on the political side, I think, are much clearer to see, and I think that's what Kathy's going to be talking about a little bit. Okay? But the reason, why is this happening? Well, there's a couple of arguments on why this is happening and why this is going to impact the future of the state's economy. One is that a lot of the job growth, or a lot of the income growth, is occurring with the higher income folks. I saw a number that came out yesterday that 80% of the income growth occurred to the top 1%. Okay? So the economy that's growing, where's the benefits going? It's going to the very high income folks. The Warren Buffetts of the world, the Bill Gates of the world. Okay? They're the ones that are capturing a lot of that economic growth. The other thing that's happening, and there's a lot up here, and I apologize for putting so much up here. What this is that occupation forecast, the types of jobs that the state is thinking is going to be growing over the next 10 years. And what I did is I broke this out by the average number of growth in jobs per year that they're thinking. What's important here, is there a laser pointer here? Good. Is this bit right here. Look at the top jobs where we're going to be seeing the most growth. You don't need a high school degree to fill a lot of these jobs. Okay? Well, what does that mean? That means that these are really not very good paying jobs. So we got two things that are going on here. Actually, you got to go down to, what is that, number 7 or so, until you actually hit nurses, registered nurses. Okay? What's happening here is that a lot of the growth that's occurring is actually going to the higher income folks, and we're generating a lot of very low income jobs. Okay? Now this is a cause for concern. This is not sustainable. But how it plays out in the long run, economists are really very unclear as to what's going to happen. Okay? Now, what's the future going to hold? One of the things that the Wall Street Journal does is they provide a survey of different economists or business folks that do economic forecasts. If you were all economists or MBAs and you worried your day job was to worry about what the future of the economy was going to do, and I asked one of you at random, what is your economic forecast? Odds are you're going to be wrong. But if I take an average of all of you, that average is probably going to be right. And that's what the Wall Street Journal does. They survey, in this particular survey, they surveyed 60 economists. Actually, I got it on the next slide. And what I'm doing here is that they provide this. So this is the January forecast, okay? 67 folks responded to their survey, and this ranges from the Wharton School of Economics to some major banks to some major insurance companies to some independent economic forecasters. What I've done here is I plotted an average. That's the average forecast for what we think the growth rate for gross domestic product is going to be, and then I took one standard deviation and added it and subtracted it. How many of you remember that from your statistics course how many years ago? See, it's coming back to you. Okay? So we feel pretty clear that the actual forecast is going to be somewhere in there. Okay? So what's going to be happening here? Essentially, we're thinking, or not me, but the folks that answered to this survey, and I happen to agree with it, is that over the next year, we should expect to see gross domestic product grow at about 2.7%. Okay? If you look historically, since 1947, the average growth rate has been 3.2%. So we're continuing to grow, but at a very slow rate. Now, they're forecasting that it's actually going to start ticking down. We're not going to go into a recession, but that growth rate's going to be ticking down. Why is that? Well, we think the interest rates are going to start going up. You may remember that in the past, that as I've talked with you, is that I and Bruce Jones actually had been forecasting that interest rates were going to go up. And every year we were wrong. Why? It's because the Federal Reserve decided that they were going to basically keep their foot on the gas pedal and keep interest rates low. They have decided to start moving away from that. Okay? Indeed, if you look at the federal funds rate, which is basically what the federal funds rate is that at the end of the business day, banks have to have a certain percent of cash on hand. It's part of the Glass-Steagall Act from the Great Depression. Okay? Well, at the end of the day, banks may have a little more than that, or they may have less than that. So what the feds do is that they provide a mechanism for these banks to loan money back and forth to make sure that they hit that requirement. Okay? The Federal Reserve sets that interest rate. That's the federal fund rate. Okay? They have basically kept it at close to zero since the end of the Great Recession. They have started to tick it upwards. Okay? Now the forecast is that this interest rate is going to continue to tick upward. Okay? But remember, this is a policy decision. Okay? This is not the outcome of the natural flow of the economy. It is what the Federal Reserve is making a decision on. So what we're thinking is that they're actually starting to increase it, and we're going to see that increase go on a little bit. Slowly but surely it's going to go up. Now that's going to transfer over into what consumers pay in terms of, and this is a forecast of the corporate bond interest rate, is that it's going to continue to tick up. Now what happens if interest rates start to tick up? The economy starts to slow down. It costs you more money to borrow. Okay? That tick up in interest rate is part of the reasons why they're thinking the growth rate of gross domestic product is going to tick down a little bit. We're still going to be growing, but at a slightly slower rate. Okay? The unemployment rate. The average unemployment rate is expected, and again this is nationally, is expected to stabilize around 3.7%. Okay? Since 1947, again, the average monthly unemployment rate has been about 5.8%. So our unemployment rate is actually pretty low. Now that runs into a question, are we experiencing a labor shortage? And with an unemployment rate of 3.2%, you would think that, oh, we got a labor shortage. Maybe, maybe not. That's something that Tess is going to be talking about. Okay? Inflation rate, we expect the inflation rate to remain fairly stable. Kind of at about just over 2% inflation rates. And again, since 1947, the average rate of inflation has been around 3.6%. So again, we're expecting fairly modest rates of inflation growth. What are the odds of a recession in 2018? The average probability from this survey of economists is about 13%. So the odds of us going into a recession this year are probably pretty low. Okay? Who's going to benefit from the corporate tax cut? The economists in this survey basically said who's going to benefit the most are shareholders. And why is that? Well, the logic here is that what a lot of corporations are going to do with this tax cut is they're going to take that tax cut and basically buy back stocks. They're going to increase their dividends. They're not going to be making the major investments that folks have been hoping for. So the short-term impact of the tax cut is probably going to be fairly modest. The long-term impacts could be different. Okay? And I'll stop with that.